Good morning, MMTs. Monday, and a wonderful day at that. 5:44 a.m. Pacific Standard Time, 3/26/2012. Taking a look at the pre-market setups and gap setups, and we can see that price line has a $5.05 gap, but we know that that's extremely overbought bull gap, which is nice, and it will hit a high and it will pull back. Now, the Apple at 397, and you got Google over here, okay? But look at here, that TQQ. It's popping 2.49 pennies right now, $2.49. Some of the short squeezes, like in GOLD, up $2.13. That's that coverage that we had with you in that mining sector. Certain ones will hit bottom support levels for very quick trades, and you would want to be selling into those. So anything that has to do with that last retracement and where you get some of those bounces in some of the miners, you would be selling into them. Okay, so that's GOLD, and you want to look in their group. Okay, the main frame that we're going to work with in the brain today in the application is price exhaustion peaks, okay, and they're called deltas. So if these gaps are between, let's say, 0.35 to 0.75, then you would know what that dollar ratio is equal what's in the system. And at some point, you're going to have a reversal. That is where that short debit intraday comes into play. And in a lot of cases, on some of them, could be anywhere from 600 pennies, which is $6, to 350 pennies on pullbacks. And you want to be able to get those debit transactions. They're important. When you get ready and they hit and they bounce off of that long side, once they pull back from the intraday highs from that short and they come back down and they hit the lower support levels, you're going to look to see how they bounce within the overbought exhaustion price ranges. It's very, very important that you understand that. So if something like Priceline, we've gotten short up there at the highs before, and the stock has dropped $20. Yeah, throughout a trading session. And we have plenty of live videos with those and how they work. We're always looking, just like we've been doing with Apple on the highs. We've been shorting it on the highs. Right up there at this 52-week high, we got it. It's been in, it's in a range. We went over the training over the weekend. You got a nice gap right here. And what I will be doing is I'm going to put together some Apple calls and puts that we had talked about over the weekend. I will introduce them momentarily. Just for reference, I want everyone to know that this is a daily chart, because it is, and yes, it's a little bit big. Here, let's make sure it's in the live video here. In pre-market, 5:55 a.m. Pacific Standard Time, 3/26/2012. What do we have here is that we have what we call, I call it an inside profit taking day. But what I do call it is for the last several days, and I'm going to show this to you in this manner again, because we're going to be focusing on how Google could trade right up to its highs where we were selling it before and trading it last year. Is that the thing about it is you take a look at the amount of up days you have here, but you go back 5 days. So this is 1, 2, 3, 4, 5. Notice that day 1 here of 5 was a breakout daily, but notice that every dip held support every one of these wicks, and some of them were nice. This thing bounced like a New York jet. No, this thing came off the runway real fast at that support level, and it sure did, and it made a higher high. Now, granted that you're looking at the 5-day price action, which is also going to show you that if I'm looking at a 550 put over here, which I am, and you can see where they were in price. They were way up here at $40. That side of the market has been short all the way down here to 475. It's very cheap. It's very cheap because it is. And it's a 550 April monthly expiration. Look, the dates here, now MMTs, here's what I'm going to tell you. That markdown in the last 5 days. So you go 1, 2, 3, 4, 5, right here. Wow, imagine that. That was a gap down day, and it was about $10 a contract, and now they're over here at 475. Now, why are we so good at that wholesale bid at that right time? It's because we know how they take premium from the actual holder of the 550 put, and they walk them down to these prices. And what happens, the short sellers, the hedge fund managers and people that use them, they too can get written down, marked down is what we call it, but it's the wholesale side of the market. Now, if I take over here, and that was just a brief update on that reversal day. So we know that that happened on it. Another thing we're going to take a look at is this Apple chart, and I'm going to go back over here, and I'm going to get some put options on Apple as well lined up. And one of the things I'm going to show people, we'll go back to here, but we're setting up all of these trades. So that 550 put, you're going to want to watch it. Why? It's at a wholesale price. Here it is. The $4 gap, they're going to bring that down in price. Go ahead, Brian Plain. On the Apple 550 put, we'll just start with that limit order, and we'll let you go at $2. So on the Apple, it's got a ratio. Put that bid out at $1.40 right now on the Apple 550 put, and I'll get back over to the Google deal. But here's that Google chart, and here's that reversal. And one of the things that I'm just showing referencing is the Google calls are bloated, and here they are. So go ahead and put the bid out there on the Apple one. And here's a March here on the Google 650 put is the one you're going to want. And here it is. You can see that the 650 put on Google is down here at the bottoms. They took a lot of premium out, look. And they took premium out of those Apple ones too now. So that's why we're going to be bidding the Apple calls and puts relatively the same. So this is deflated. And I'm going to mark this down. It's a Google 650. And Google is gapping up. You can see that. So what I'm going to do is $17.75, Brian Plain, is a good bid for right now in pre-market at 6 o'clock a.m. Pacific Standard Time. It's a Google April 650 put. And this Apple one that we're going to be doing, it's the same setup. We have all of the calls and the puts here. What I'm trying to show people is that they're deflated. If you look at the call side of the market, so here's a 650 call. But look at the 650 call here. You can see that it's inflated here. You can also see what I'm talking about over here. So when you look at where the high dollar, this is definitely retail up here on that Google deal now, okay? And basically, you can get a little bit more inflated, but not too much. And you can get, on this side of the market, you can still come down to that lower end of that deflated area here, and it's a 650 put. versus that 650 call. And what I'm trying to show you here in the price directions is how they're going to work. Now, keep that Apple trade working in the background because it's all relatively the same when I put them both together. So here it is, MMT. This is where the bull has trouble. And this is where you have to be looking at getting on the other side of this inflated price at this wholesale bid. Now, will they hit that lower price today, 17.75? I rather doubt it. The only way that that's going to happen is, and the only way that, yes, these are going to peak at a high. The only way that that's going to happen is that Google right here is going to have to break above 652. Okay, it already has that gap working for it because it does. 6,500 shares, big deal. 642, that's a $3 gap. Of course, they're not going to take that premium to that lowest level of that market, but we will have people set alerts at 2360, okay, falls below the contract right now, and set another alert to be notified at 2270, and one other alert would be at that $20.80 mark, falls too. I just want people to understand that you have to break the highs to get this contract at the lower level. It's already been marked to market right here, marked down. And it's about how do I get that wholesale bid. And here's a retail. And yes, this is a 650 call. And you already could see where it got top heavy right here on Friday from the highs down here to these ranges here. So they're still elevated, but they can still go higher a few dollars. These could go up to 25 to 28. And these can come down one more notch. But they will be mathematically, it will meet the requirement, MMT, for you to start making transactions based on the criteria. And you will have to break above those price levels in Google. We'll watch and see how much premium that they take out. Now, don't forget that Apple in your pocket in the background. So let's start setting these alarms and let's start working with the April one. And I will do some fast hooks on Google weeklies. And what will I do? I'll go right here, right now. This is where they really still premium. Look at these calls. Look at these calls. They're a weekly. Look at the last print. Look at the highs. There were 730 on them highs on Friday. All right. So what I'm saying, we're going to watch how much premium that they respectively take away or add to this contract. And we're going to be focusing that when this gap pulls back, I'm going to put bids out here below the market, and I'm going to have them down in around that $2.30 area to $2.50 area to get the call. All right? And the weekly 336.50 call right here. Here's that weekly call. It's at 650. And here's that 650. Okay, and what is that side? The put side. Now, what are we going to do? That last print was there. In the background here, we've been talking about April and whatnot and setting alarms because we are going to be going through the trend structures. Google has to break above 652.50. I hope I make it clear to the live MMT participants right now in order to get your April contracts down. However, this guy right here with the $3 gap, because it's a weekly, and they love to steal from who? You. And I don't like it when they get away with that. So what we're going to do based on that, we're going to line this bid at $5.80 on the opening bell on 3 contracts. These are just for the new apprenticeships that are doing this now. And then we're going to line it on 3 at 660, which is a $4 wholesale bid drop down there. And we will even take one to make a market, and that's called scaling a market within a range. You can see that wholesale is everything. You can see that these were up $1.10. That 1130 is the last print there on that 650. So we're going to have it in those ranges, but just remember, Google stock does not have a $5 or $7 or $8 gap ratio. So the narrower gap ratio on the open, they'll take a little less premium. It'll be after the opening bell and through the start of the day. It's Monday. They're not going to take all day on the first day, but over the calendar 5-day period, of course, there's going to be markets made in these things, but this gap better run higher in order for you to get your entry. So Google has to race up and make higher highs on the opening bell to get your price level entries here in play. The time is 6:10 a.m. Pacific Standard Time, and it's pre-market, and it's live order entry management. However, things can change by that opening bell, depending on the dollar ratio gap from that close. This is not a very big one. But we're going to see if they, on the opening bell, do they start hitting these things between 820 and 870 based on these mathematical equations at this very moment, 6:11 a.m. Pacific Standard Time, 3/26/2012. Just remember that Apple's in your pocket. And we've talked about the Apple one. We've talked about Apple calls and puts. The 600 on the one of the ones that we want to monitor is that we're always wanting to monitor like the 600. It's down here. You can see the put right here, that 600 on Apple. And you can also see over here where this 595 call is right around here, and they're April contracts, by the way. However, we're watching some of the Aprils just because we're going to find out exactly how much premium. You can see the top of these calls were up here. They're already pulling back. So we would love to be able to steal these at some point around $10.50. But then Apple has to break down. And right now, it's got a strong gap. Once again, I'm going to cover some of the call and put structures, though, in the near term. I'm going to go to this 600 put, or 605 put, rather. That's a weekly, 330. Let's get these prices down. And the thing about it is, we're going to watch how much premium they take. We'll see here at that 605 in the money, Brian Plain, on a 330, if they can get these down around, let's say, 875 by 950. In that first area, depending on how much they run this up to. If they run this up toward the 605, it had only a 297 range. Okay, it's a 330 605. The 600 is right here. 600 put weekly, and you can see it has a 265 range. So the ranges, and they were slightly up. In the money, 605. We'll be watching the 610 side. Here's that 610 put, 1685 by 1740. We'll be watching that market. 2,400 volume was traded. We know one thing, though, it has a $4.35 range. So I'm going to be watching that 610 put. It's $10 in the money. What am I interested in? I'm interested in that range, okay? Because if we break above 602.50 and start running north, then these price levels will get marked down even more. And we've already done our Apple special. One of the things we're going to be featuring outside of these is the all-time 52-week high price line. We've been with this one. Get to that 720 put on price line. And I can tell you, we talked about price line getting up here to these price levels in our live analysis that we did. I'm going to be watching the $720 put. And here it is. It's a weekly, and they don't have much on them, but it doesn't matter. I can show you in April so you can have a reference to them. Here you go. They don't have much traded on them, but they were very expensive. They've been marked down here. You can see up here, they were, $90 all the way down to 24. So that's what a chart looks like, and that's that price level. Watch the April 720 put. However, you're not going to have very much data on this one. It's a weekly, so it's pointless looking at it. Well, what we will do is show you, though, that when price line makes its high, we're going to take this 720 put right here, and I'm going to find a home for it somewhere. Price line. This put, the range 440. What am I going to do with it? Well, I can tell you right now, based on that gap, Brian Plain, it's a 330, 720 put. I'm going to start my bids down around 775 on these. That's about $5 clip. That's where I'm going to buy one. I'm going to buy another one, though, below the market at around that 480, 440, 480 handle is where I start adding more contracts. When they bounce, you want to be selling them. They're only good for intraday on price line. That concludes pre-market. Stock market opens up in 14 minutes. It's 3/26/2012. These are just some of the ones that we're doing with MMTs live. I will tell you, good luck. We'll be watching all the bid. Here are the Apple 610 put. I got it in here twice. I'll get rid of it because I'm going to be putting a price line deal. Here's that price line. I've got it pegged. I'm going to put it over here on a different monitor. Here, what I am going to do is take the Apple calls and get those set up for your entries.